Yeah, indeed. And the first point actually that I would like to make on this is that expanding global liquidity has been probably the strongest driver. In fact, I would say clearly the strongest driver of bull markets in recent times. And I don't just mean the crypto market, I mean financial markets in general, and especially since 2008, the financial crisis. Basically, asset prices are increasingly shaped by what previously would have been termed unconventional central bank policies that basically directly affect liquidity conditions. And these have actually increasingly become the dominant force in moving asset prices. Yes, the pace of the rate cut may slow, but I wouldn't be too concerned about it. We're still looking at fairly strong economic growth, and we're still looking at an ongoing rate cut cycle. And this combination typically is an ideal backdrop for risk assets, even if the rate cut cycle is slower than previous expectations.
When we were in the euphoria stage, pretty much just this past month, just focusing our attention on that, you know, especially when President Trump got elected, everybody was pricing in. One of the main things I saw the markets price in was that Trump was going to be extremely bullish for crypto, which on the regulatory aspect of things and the developments surrounding institutional adoption and, you know, just like large scale organizations being more compliant with the regulatory environment. Obviously, of course, Trump and his pro crypto stance is positive for crypto, but as much as we want that to move the markets, that does not move the markets. Like liquidity moves the markets. And these large scale financial institutions, when it comes to liquidity positioning, what are they paying attention to? Obviously, of course, like I mentioned, the Trump being, you know, the elected official for the next presidency is positive. Don't get me wrong. I'm not saying that that doesn't have anything to do with the positive momentum, because it clearly does. But I feel like right now the market's at a turning point where it's starting to realize, like, oh shit, you know, maybe we priced in a little bit too aggressively that Trump being positive for crypto short term was positive, because short term, especially surrounding some of the things that he just recently announced with these tariffs on Canada, Mexico, and China, are actually going to possibly increase inflation, which we know as mature investors behind the scenes doing these fundamental breakdowns. If we start to see elevated inflation month after month, year over year, reports come out, what's that going to bring back to the table? That's going to bring back to the table the idea that the central bank, the Federal Reserve, is that they're going to hold interest rates for a prolonged period of time, or possibly even bring back rate hikes to the table, which would be really freaking bad for crypto short term and bring back a lot of dollar strength that a lot of people were not expecting. So, and again, like I said, like this is nothing new. So if this is your first time on these Zoom calls, don't forget you guys have access to our historical log of Zoom calls, which even though they're not current now because we're constantly shifting through these fundamental updates, highly recommend over time, if you guys are ever kind of just stumped on what to watch, that you go back and you watch all of those calls, literally starting from the first day that we started recording, because you're going to learn so much, not only about how I accurately analyze the markets, but you're going to start to, just based off of repetition, learn the vocabulary and learn what we pay attention to here in CYPRX every single month and every single day that we have these calls. So, yeah, this call will kind of just be an open forum. I'll kind of just like, I'll rant. And if you guys want to put in your 2 cents or anybody wants to talk, you're more than welcome to. But I just have a couple of tabs open that are more recent, because this morning I wrote you guys a report. This report's still relative. I can see some of you guys still reading it now. But the sentiment has slightly dampened. And the sentiment has slightly dampened due to a couple of different factors. Number one, the market getting ahead of itself, pricing in aggressive rate cuts from the Federal Reserve, which now has slightly changed, especially after. Can you guys see my screen, by the way? Or am I just talking out of my ass right now?
Yep, you're good.
Okay, cool, sweet. Thank God. Which after today's FOMC meeting in minutes, which is kind of just a review and an overview of general comments of the previous FOMC meeting, came out relatively neutral and relatively hawkish leaning or pushing back the ideology of continued Fed rate cuts. So that's one factor, right? The market's starting to, fall back a little bit on pricing and aggressive rate cuts from the Fed, which we know higher interest rate environment inevitably leads to a risk off market sentiment, even if it's temporary. Because again, I'm not confirming that these conditions are going to remain because tomorrow some shit could change and we could see a massive bullish turnaround and we'll adjust to that as time goes on. But we need to understand what things are creating this profit taking environment because right now, especially with core inflation later this week, the PCE, which is the primary inflation gauge from the Federal Reserve, we have tomorrow's Tokyo CPI to pay, or sorry, excuse me, Thursday's Tokyo CPI to be paying attention to. Um, and then next week, we also have the December, well, it'll be November's labor market data with the unemployment rate and the NFP figures, but it comes out in December, the first week on Friday. We also will be paying attention to that. And then we have the Bank of Japan policy meeting in December as well to see if they hike rates. And all of those things, all of these things that we've been talking about for weeks on weeks on weeks, as we progress, it's starting to cook up, it's starting to build up. And so you guys are going to start to see that things we were talking about a month ago, as we head into December, are going to start to become relevant. Um, so I'm not going to bore you guys to death and read through this fundamental report. Hopefully you guys have read this. I went into detail. I really liked writing this report for you guys because when I was a novice beginner investor, one thing that I had a really hard time understanding was the buy the rumor, sell the news event. Like for some odd reason, the way that that vocabulary is pieced together, my brain in my early days could not comprehend that. And I did not understand how to apply that to my investing into my trading. And so in today's report, I really broke that down for you guys. So I kind of want to talk about that. I think that that's the only thing that I'm going to go over in today's report. So that way you guys understand that. So let's see, where in the report do I talk about that? Sustained profit. Let's okay, so right here. So I said to you guys, profit taking ahead of key economic data. From an institutional perspective, let's think about that because that's obviously, of course, how myself and Usman and pretty much hopefully you guys as well trade. We don't really trade from this retail perspective. We try to come into the markets non-biased, non-opinionated, and we try to focus on what institutions are doing. You have to start seeing the market for what they really are, and it's a big, massive algorithmic manipulation game, right? The markets don't care about you making money. The markets care about manipulating the shit of everybody that's participating in the markets and going the direction that order flow is projected in. So from an institutional perspective, let's think about this. If an entire month's worth of price action has been bullish, which November pretty much was, it's normal to see some profit taking as the month ends, especially when on the horizon we have key economic data reports like the PCE and the NFP that are set to come out. And we know that those two reports primarily, because there's many other reports that we need to focus on, but those two primarily for the Fed positioning are going to impact the market sentiment either positively or negatively. And by now, you guys should know, after keeping up with these reports, how when those reports come out should impact market sentiment, right? Lower inflation readings or weaker labor market data will support further rate cut bets. And inversely, higher inflation or stronger labor market data will push back on those rate cut bets, i.e., creating a risk off market environment, which is what I currently think right now is most likely what's going to happen. Unless the NFP report from December comes out fucking horrible, I personally think that the Fed's going to hold rates at their next meeting. I'd be surprised now if they did cut based off the data that we've gotten, which has been higher inflation and sustained labor market figures. So just keep that in mind. Outside of that, I talked about the Middle East and geopolitical developments, and this is where I really broke down the buy the rumor, sell the news. So this is what I really want to fixate your guys' attention on. So I talked about how the markets in November 2024, the 15th to be exact, the markets had priced in the optimism from mid-November for ceasefire talks between Israel and Hezbollah when Elon Musk went to go meet with the Iran's UN ambassador. Okay. I paid attention and I shared that with you guys because that shit just doesn't happen for no reason. And in their conversation, they talked about discussing possible ceasefire talks. Here's a piece of that article right here so you guys can see the date. And if you go and you look at the charts on the date that this took place, which I sent you guys a screenshot of, you can see back in the total cryptocurrency market cap right here is the 15th. So the market had created a higher low, i.e. continued bullish order flow technical analysis, sustainably holding above that 2.9 to $3 trillion mark, broke above that and retested it. So that was one of those fundamentals that the market was pricing in back in mid-November as to what was driving this market optimism, right? So this is a buy the rumor. There was rumors on the 15th, because remember back when this fundamental dropped, when Elon Musk went to go meet with the New York or with the UN ambassador for Iran, this was not confirmed that we were seeing ceasefire talks. This was just a rumor. So I'm trying to get you guys to see the buy the rumor, sell the news, kind of how it plays out in the markets. All right. Then fast forward to today, back to our economic report. What did we see? We saw reports of Israel Prime Minister, I'm not going to butcher this gentleman's name, and his willingness to finalize a ceasefire deal has now triggered a buy the rumor, sell the news reaction. So you can see the dates on the 25th of 2024. This fundamental breaks. We also saw another one actually just a couple of hours ago. Which time is it? It's 2:20 p.m. So this is posted 2 hours ago. You can see here, Israel cabinet approves ceasefire deal with Lebanon, right? All these Twitter enthusiasts and all these Twitter news platforms tweeting out the same thing. Well, from a retail perspective, because remember, we're thinking institutions. These institutions move these markets, and these institutions bought this rumor fucking days ago, weeks ago. Now we're heading into the last business week of November, where institutions, from a profit-taking perspective, remember, they're business-oriented, they're profit-oriented. And if institutions who drive the market are in profit, which they have been since pretty much all of November, before their business month ends, they're going to want to secure those profits for their balance sheet books and their books, right? And so when this data actually came out today, retail traders are thinking what? Oh, this shit's going to be positive for markets, right? Which it is long term. Don't get me wrong. It's not negative at all by any means possible. But from an institutional perspective, they're going to dump on all these uneducated investors that are thinking, oh, the markets are going to keep going up. No. So if you go look at the charts on the date that this data came out, this is where buy the rumor, sell the news comes out. Because when the news came out here on the 25th, what happened? The market actually tanked out, and the institutions that are educated that were buying the rumor back here days ago are now securing profits. They're taking profits, they're scaling out of their positions as we are about to get more fundamental data that is going to create either a continued bullish environment for crypto or a bearish environment for crypto. And these institutions that facilitate open orders in the market are going to be able to equal out their positions. Okay. It's very simplistic. So this is where the whole ideology, I'm not going to, like I said, read all of this to you guys, but if you guys want a little bit more in detail breakdown on this buy the rumor, sell the news, so that way you understand it and you can start to incorporate it in your investing and trading regime, because this happens in FX too. This happens in commodities. This happens in futures. All right. This happens in all markets. Read this portion of the report and really truly understand it, because this was a really good example. So investors bought the rumor, and then when the news actually came out, uneducated retail investors were continuing to buy, getting caught off guard, and more sophisticated investors were selling their positions and selling their profits, right? So this was just a really good example. I really enjoy this type of technical analysis combined with fundamentals, because it really gives you a perspective on how manipulative these markets are, all right? And why, back when rumors come out that are supporting a risk-on market environment, remember we were talking about, oh shit, hey, look, crypto's breaking out above $3 trillion. If we hold this, we're going to continue to go higher. Remember, I gave you guys that little tiny breakdown in the Discord chat. I don't know if we could go find it. We could probably go find it. Let's go see. I want to confirm this for you guys. Let's go back a couple days ago. I know for a fact that was, if it wasn't all you, here it is right here, right? So look, this was back when we broke above $3 trillion or $2.9 trillion. And I drew this for you guys and I said, hey, look, We broke above 2.9 trillion. If the market continues risk on, we're going to tap up into 3.2, 3.3 trillion dollars. Where did the market tap up into? $3.3 trillion to the T, right? So my analysis that I gave you guys technically back a couple days ago, this was mid-November, came into fruition. And now, fast forward to today, we're seeing why profit taking is unfolding. Because all the things that we were talking about in previous fundamental breakdowns, interest rate hikes, pauses from Federal Reserves or from the Federal Reserve on interest rate cuts coming into fruition. Remember back when Trump gained presidency, I was probably one of the only influencers on the internet telling everybody, hey, everybody's super optimistic about Trump becoming president, but nobody's paying attention to his policies, and his policies could drive inflation higher. Now we're seeing fundamental breakdowns today. Look at this. Trump's proposed tariff increase would boost inflation by nearly 1%, Goldman Sachs estimates. We were estimating this shit back when Trump became president. This is nothing new to us here at CYPRX, right? And look at what it says in this retail fundamental. Traders have been dialing back their expectations for Fed rate cuts in 2025, though it's unclear of how much that is due to the election results versus a resilient U.S. economy. Fed Chair Jerome Powell has said the central bank will consider the impact of tariffs and other fiscal policy changes on the direction of inflation once the details become clear. Monday, Trump said on the social media post site Truth Social that he would impose an additional 10% tariff on goods from China and 25% duty for Canada and Mexico. Goldman's chief economist, Jan, said in a note that the proposed levies would result in notable increases for consumer prices in the U.S. Using a rule of thumb that every 1 percentage point increase in the effective tariff rate would raise core PCE price by 0.1%, we estimate that the proposed tariff increases would boost core PCE prices by 0.9% if implemented. PCE refers to the Personal Consumption Expenditures Price Index, which is the preferred inflationary reading for the Federal Reserve. We talked about this freaking weeks ago, and now we're starting to see retail catch up. And what is everybody doing? Everybody in the retail side of things, if you go look at like Cointelegraph, they probably write articles. Oh, crypto's dumping. Crypto's down 100 billion. Oh my gosh, freak out. No, we talked about this. We know here at CYPRX why the market's shifting, because now the market's taking a step back. Or early November, if we go all the way back down to the bottom of November, right? When the market was extremely optimistic, what was happening? The market was aggressively pricing in Fed rate cuts. Remember, at the beginning of November, the prospect of a Fed rate cut happening in December was at like 85%. Then mid-November, right here in this area, it went down to like 70%, 65%. And now all the way at the top, as more data comes out, as these announcements come out and further developments unfold, right? You're starting to see investors dial that back even further. And so now the prospects of the Federal Reserve cutting interest rates in December are at like 49 to 50%, which is way lower than they were back here when everybody was heavily pricing that in, or even here mid-November. And so what's happening? Investors with much more money than you and I, again, as we head into the new business month, are taking profits from their positions back here when those percentage chances were at 80%, and also taking profits from here when those percentage chances were at 65%. Now that prices are here at highs and investors are in profit, and those chances of a Fed rate cut have dwindled down to 50 to 49%, investors are like, oh, okay, shit. Let's stop taking aggressive bullish bets, sell our positions, because what do we have Friday and next December, or first week of December? We have PCE and we have the labor market data. And if those data prints come out further supporting a pushback on rate cut bets, guess what? We're going to be already out of our positions, and retail traders are going to get caught with their pants down, right? Because if the market starts to continue to pull back and possibly revisit these areas, right? And then Friday, the data comes out pushing back further on rate cuts. Larger investors already sold out of their positions here, and retail investors haven't, and the market's going to continue to pull back, right? So again, another reason why I'm attempting to host a Zoom call for you guys is so that way you understand why all of this stuff is happening. So this was another reason, right? Markets dialing back future prospects of Fed rate cuts due to the increase in tariffs from President Donald Trump, who said that he's going to initiate these tariffs first day in his presidency. which we know inevitably will weigh on risk assets. I just wrote an entire piece for you guys on why and how the markets price things in. So think about this. If the market's pricing this information in now, okay, if the market's pricing this information in now and we do start to see profit taking escalate further, and then the market comes all the way back down here to these lows, well, when the data actually comes out in the future, right, the market's already priced this in most likely. So when the market either does announce rate holds or maybe rate hikes, it could have the inverse effect. And then maybe later on in months from now, we will again be talking about buy the rumor, sell the news, right? Or this idea that the market's already pricing in this data. All right. So that was one thing I was paying attention to that I wanted to bring everybody's attention. This is extremely optimistic in just global markets and an environment in general. Remember, I said to you guys that in order for us to see a real bull market cycle kick off, like fucking like we're dead ass confirmed, okay, we're going to new crazy ass heights. Remember, this is one of those things that I said to you guys needs to be put in our rear view mirror. Now, I don't necessarily know what this is going to mean moving forward, but this is really good groundbreaking news. Hopefully, after this, we only continue to see positive developments on the forefront for the Middle East tensions. Israel cabinet approved ceasefire deal with Lebanon that happened today. Excuse me, I won't beat a dead horse. Excuse me, but like I said, more things are starting to come in fruition for us to see really good positive price action in December, or sorry, excuse me, in 2025 after we get through a couple of more headwinds. Like I said, I still think there's a couple of more things that we need to put behind us to really confirm, like, all right, these altcoins and this uptrend that we've been seeing recently is going to continue with no major setbacks. This was one of those major things. So this is really cool to see. Hopefully we don't see any positive, or hopefully we don't see any negative developments after this one. All right. Be on your toes because again, this is not guaranteed. Okay. So just be mindful, understand that any further escalations into this weekend or in the future could obviously, of course, further weigh on risk sentiment. I wanted to bring this one to everybody's attention as well. As for the FOMC meeting in minutes today, I plugged it in. I literally just, like I said, you guys got to start to utilize artificial intelligence to your benefit. I talk about this in CYPRX 4.0. I literally use AI every single day of my life. If you're not, you just, in today's day and age, humans, with everything that's happening with this technological advancements, we're not able to comprehend all of this data and all of this information by ourselves. That is a fact. You, like, for example, if let's just put you and I in a room together, okay, and we both get this report at the same time. This is the meeting, this is the minutes, excuse me, minutes of the Federal Reserve Market Open Committee, okay? And you don't use artificial intelligence to read through this document and skim through it and get little tiny vocab words and key, highlights. And I use artificial intelligence. Who's going to get through the document faster? It's going to be me, because I'm going to be able to copy and paste it into artificial intelligence and ask all the questions that my human brain wants to understand about this document much faster than you, who's just reading this document, which is a 17-page document, is going to do, taking your own notes and highlighting on your own behalf. So what I simply did to read and understand this document, which I do with almost every Federal Reserve document or any document from a bank or institution, to understand it to a way that my brain can comprehend it, is I'll copy the document, plug it into ChatGPT or Chat PDF, and I'll ask it questions. Any questions that you want to know. Is this bullish? Is this bearish? Does this support risk asset mood? Does this not support risk asset mood? Is this hawkish? What does hawkish mean? Is this dovish? Now we are in an age of information. If you do not understand these documents and how they impact, the markets or your portfolio, you're wrong. At the end of the day, you got to start to dig into this stuff. And if you don't have the time to, that's fine. Maybe that's why you're in the CYPRX community, because we do this for you and you're just reading our fundamentals. That's great. You're still at least participating. But when we talk about these Zoom calls and I talk about hawkish this, dovish that, and you don't understand the vocabulary, again, you're slacking. Why don't you understand that vocabulary when we have an entire PDF in the Discord that breaks down hawkish versus dovish? If you haven't read that document, go read it. You paid for the services that CYPRX provides. Go educate yourself. So right now, what I'm seeing from this document and what I'm seeing from the FOMC meeting in minutes is a more neutral tone. So just to read this one tiny snippet, it says, this summary of this document leans more so towards supporting a pause in rate cuts than further reductions. Here's why. It talks about stronger economic data. rising treasury yields, market expectations, inflationary trends, equity market confidence. Okay. What I'm primarily paying attention to is the labor market data outside of the inflation data that we're going to get, which right now is projected to come out slightly higher. What I'm heavily paying attention to is the labor market data that we're set to get in December. Right now, the market is pricing in higher inflation, but what the market is also pricing in is the possibility of a misprint in the labor market data. So if the labor market data, even though the inflation data comes out high, if the labor market data the first week in December shows weakness in the labor market, it is going to leave the prospects of rate cuts on the table. Okay. So if the labor market data comes out in December weak or showing signs of weakness or lower labor market figures, I still think that the prospects that the Fed is going to cut rates is going to remain, and that the Fed will cut rates if we see weaker labor market data. If we don't, if we see a rise in core PCE this week, and on top of that, we also see healthy and resilient labor market data the first week of December, I think that the Fed will hold rates steady. Okay. Obviously, of course, I don't think that they're going to hike rates unless we see President Trump's policies increase inflation, but they will at least, at a minimum, in my personal opinion, hold rates steady. Now, what effect that is going to have on the markets, I can't sit here and say. I know that based off of historical data, a prolonged higher for longer interest rate environment tends to weigh on risk sentiment. But again, I've been watching Signum reports and things of that nature, and there was a Signum representative, head of their global research the other day. I shared this video for you guys in the chat, by the way, if you all watched it. And she openly stated that even if the Fed were to hold rates, it would not have any real major negative implications in the market. Yes, some profit taking would happen and maybe a small correction, but it wouldn't be anything extremely devastating. I personally hold on to that perspective because if the Fed does not hike rates, then the interest rate environment will remain the same. And we've gotten here so far off of the current interest rate environment. So yeah, we could possibly see some profit taking unfold, but it won't be anything too significant if the Fed holds rates. Why? Because the market will most likely still maintain optimism that at some point in time in 2025, the rate cut cycle will continue. Now, a thing that would dampen risk sentiment is if, like I said, we do see higher inflation heading into 2025 and the ideology that the Fed might hike rates come back to the table. That would be one of the catalysts that we need to pay attention to for further profit taking on our portfolios, possible capital reallocation, and a further depreciation in the total cryptocurrency markets, as if we see higher inflation and CNBC, Reuters, Forex Factory articles coming out saying, hey, Fed's probably about to hike rates at their next meeting to try to tame inflation again because inflation's spiraling out of control. All right. Last but not least, another thing that I found today, I was just researching Bank of Japan. Like, look at this juicy stuff. You literally just type in Bank of Japan in Google and look at all these juicy ass articles that are now coming out. Look at this, 11 hours ago, 13 hours ago, 19 hours ago, all updated information. And what do you think they're talking about? Can anybody tell me? I'll just leave that open question before I read these articles. What do you think these articles are going to be talking about?
Carry trade.
Yeah, yen carry trade.
Right? Yen carry trade, Bank of Japan hiking rates again, right? That fear of the Bank of Japan possibly hiking rates at their December meeting coming back to the table, which I told you guys at the beginning of November was something that we needed to pay attention to that could lead to some profit taking. And now we're seeing on the same exact date that all of these fundamentals coming out, bringing fear back to the table of a possible Bank of Japan rate hike come into the markets is the same exact time that we're starting to see profit taking. Do you think that that's a coincidence? Absolutely not. So outside of the possible hold via the Federal Reserve that the market's starting to price in, outside of the already priced in positive geopolitical developments leading to profit taking, and on top of it being the end of the business month, we also now have the prospects of the Bank of Japan hiking rates coming back to the table, which creates market fear, uncertainty, and doubt. And like I mentioned to you guys, is probably, if not the most biggest risk factor to global markets in general. I mean, I don't think people understand that if this does, because to what degree this is going to unfold, that's the if part, but this will inevitably unfold at some point in time in the future. Now, I pray to God for all of our sake. It's painful. It's not painful, painless. It will be painful, but it's painless on our part when it unfolds. Like, I hope that it's quick, just like last time in July into August, it was quick. It was only like a week long. It created some catastrophe, mass liquidations, and then boom, the market bounced back. But based off of the research that I've been doing and based off of what I've heard from large organizations like the Bank of International Settlements, they said that if this does unfold in a granular scale, it's going to be so catastrophic to global markets that, I mean, like I said, just prepare. Because again, most retail traders in crypto that are just buying crypto on their Coinbase and Uphold account, they don't know about this. They don't even probably know what the heck the yen carry trade even is. All right. And so we're starting to see articles come out. This is from today, October inflation surprises. Remember, we talked about this. It's very simplistic, right? If the data supports rate hikes on the Japanese front, the Bank of Japan most likely will. That means higher inflation and upbeat economic data. And we're starting to see that. It's not been confirmed yet, but we're starting to see that. On Thursday this week, we also have Tokyo CPI to be paying attention to. And right now, based off the projections, look at this. The market is projecting higher inflation on the Tokyo front. So that would obviously, of course, increase those fears of a further Bank of Japan rate hike. But more recently, this reads, Japan's inflation nationwide October Bank of Japan core CPI rose. Again, that is a key vocabulary. Rose, rise, increase. You should know by now that vocabulary tends to bring back rate hike expectations from the Bank of Japan. What we would ideally like to see as risk asset investors that want to continue to see risk asset optimism is decreasing inflation, declining, slightly down from previous readings, those key vocabulary words, but we're starting to see the opposite. Core CPI from the Bank of Japan rose by 0.2% to 2.3% year over year, driven by higher prices for food, excluding perishables, restaurants, and public services. Despite this key Bank of Japan focus area, service inflation, excluding public services, imputed rent eased by 0.2% to 2.0% year over year. Excuse me. Upcoming data to watch. So it literally tells you in these reports what to pay attention to. November Tokyo CPI will be critical to gauge whether broader price markets materialize. Additional data points, such as U.S. payrolls and December Bank of Japan Tankan report, will shape the Bank of Japan's December decision. And then over here, it says, the Japanese yen extends its range play amid doubts over Bank of Japan rate hike plans. Then here, this article goes on to say, this is from Reuters, Japan's steady service inflation keeps alive the Bank of Japan rate hike prospects. And this is from November 26, 2024. And we've been talking about this. And so it looks to me like the markets are starting to bring back the prospects of the fear, uncertainty, and doubt based on the slight uptick in inflationary pressures from the Japanese front that the Bank of Japan could possibly hike rates. We know that as the market starts to price that in, that will be, again, one of those factors that dampens risk sentiment. And if the Bank of Japan hikes rates further, it could be one of those catastrophic things that lead to an insane market pullback. Again, to what degree that could unfold at, who freaking knows? I've always had this theory that I think that a lot of the leverage buys that are in this market before financial institutions come in need to get liquidated. And if I'm right, if I'm correct, I firmly believe, just looking at this as an extension, okay, taking from the low of November 2022 up into the high of November 2024, one of the sweet spot areas where we could see, and now you guys can clearly see, we've seen a nice extension, a correction down into is $1.5 trillion, which would shake out pretty much all the leverage buy positions from anybody that was buying the year in 2024, right? So anybody that has leverage buy positions all in these areas, if the market did correct, think about this on a granular scale. Painfully, would it suck short term? Absolutely, if the market did some shit like this. All the way down to 1.1 to $1.5 trillion, that would suck. What would cause this is some type of mass liquidation event, like the Bank of Japan hiking rates, leading to unwinding of the yen carry trade. Okay. But looking at this on a weekly time frame, this would be healthy price action. Honest to God, it would be, right? If we saw the market correct down on a 79% discount from this previous bullish run that we've started from November 2022 all the way up into this most recent high, this would be healthy. Looking out on the granular scheme of things, look at this. This would literally just be a continuation, an uptrend. Do you see that? Right? So think about how many retail traders short term would get shaken out here. We, on the opposite end of the spectrum here at CYPRX, would be able to see this as a massive opportunity. I'm talking about like I would probably pool one of my trading accounts and probably dump like another full 100K into the markets if we got this opportunity. Not even going to lie. All right. I'm not confirming that this is going to happen because we would need a major catalyst like the rapid unwinding of the yen carry trade to create this type of price action. But we're starting to see it bubble up. We're starting to see it come into fruition more and more as time progresses. So let's just continue to pay attention to this as a community. Like I'm not even gonna lie, I'd probably jump out of my skin and be like super happy if this happened. Everybody else would be freaking out. You would literally see probably the fear, uncertainty, and doubt index go below like 20 out of 100, and everybody and their grandma would be like, all right, crypto's a scam again. Oh my gosh. But in reality, they don't see why it's happening because they're not doing this type of fundamental research. Okay. So just be mindful of that. And, you know, for all our sakes, maybe even part of me hopes that I'm wrong and we just continue up from here. Maybe we stabilize above $3 trillion. None of the shit that I'm talking about that could weigh on risk sentiment unfolds, and we just continue with an optimistic market mood and everything's sunshine and rainbows, and we go up from here. But what seems more realistic? You know what I mean?
But